Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today, we're going to look at this Headset report about 2020 predictions and what's next for cannabis. On the line with us is Dan Kimmis with Good CBD Products.
I feel like you're from the future, Chronic. Good morning.
Good morning from next year. Prediction number one is that top brands will continue to gain market share. So this report says that as state cannabis markets have matured, there's been consolidation among the top players within each market. In Colorado, Nevada, and Washington, the proportion of total sales captured by the top 5 largest brands increased year over year. In Colorado and Washington, the two oldest adult use markets, the consolidation was almost dramatic, with the top brands capturing about 1/5 of the market. California, on the other hand, was an anomaly, with the proportion of sales in the top 5 brands actually decreased slightly from 2018 to 2019, likely due to the ongoing regulatory hiccups in California that have slowed the launch of that market.
One of the things that I keep seeing in the field, Chronic, that I really love is that struggle to see the top brand. Who's gonna be the one? Who do you think?
Well, I would think that the two oldest brands in Washington getting 20% of sales is likely due to the lack of trusted brands with, the mold and a lot of the pesticides, a lot of the brands that have failed a lot of the tests. Not having a trusted brand to go to has probably created some followers, but ultimately what's driving a lot of this is that what's the lowest price point, what's convenient. Those are always the top 2 factors, is price and convenience.
Capital market analyst Josh Kincaid.
So 2020 Headset predicts they're likely to continue to see consolidation of the market share under the top brands within each market, especially more mature and stable markets. Prediction 2 is that the CBD market share growth will plateau, but the variety of CBD THC ratios will continue to increase. The proportion of sales going to products that contain CBD saw fantastic growth in 2018, especially for the first half. However, for most of 2019, CBD market share stayed flat and even started to decline in the fourth quarter.
What do you think drives that? Too many people hitting the gas station to buy their CBD?
2018, the number one Google search was CBD gummies. I think a lot of people tried products that were available online but didn't have any results. And a lot of the responses I've seen from customers giving it a 1 out of 5 star is that they tried it for pain or they tried it for anxiety and that it didn't work for whatever reason. So I think that the products they tried, didn't have enough THC CBD. If it had THC, 1-to-1 ratio or 20-to-1, that would have been interesting to see what the results were. But I don't know. There's a lot of variety of reasons. But what people are going towards, is less CBD and more of the rare cannabinoids. So we're seeing CBD isolate prices at $1,350, CBG isolate $8,500, CBC isolate $30,000, and CBN isolate $38,000. So, we've been saying for a long time, as California's pulling that 600,000 pounds of hemp out of the ground right now, you probably want to switch from CBD to, a cannabinoid that has a higher margin.
And you got to think that more are going to come, right? Because that's the thing. They keep taking the plan apart and finding more and more interesting. I'm really excited to see what the next couple of years bring.
So this report says it's possible that customers are curious about the CBD hype, willing to try new products in 2018. However, as more hemp CBD products flooded the market, perhaps customers didn't need to return to dispensaries as their only source for new CBD products. So Headset predicts that the CBD market share will stabilize in 2020, capturing about 1/3 of the non-inhalable sales. Hopefully that they're going to pull some information from Nielsen, who they partner with, because Headset is only able to pull from dispensaries. So they're kind of losing data to, the CVS and the Walgreens. I don't know if there's repeat sales there or not, but the report says that the CBD ratios are going to continue to diversify. The variety of CBD THC ratios in infused products will grow year over year. Brands will look to stand out with the CBD THC market for new options for consumers. The best selling is a 1-to-1. That was up 43% of sales, or it made up 43% of sales in 2017, and then 41% last year, only 36% in 2019. There's a variety of other ratios gobbling up the market share, in particular with the 20-to-1 ratio, which Josh Kincaid, the talking hedge, uses. I love that. So I would expect to see some other stuff too, like CBL. Maybe that'll hit the market late, but more rare cannabinoid.
What's that one do?
It's mostly for pain. You're seeing a lot of that in Europe. A lot of medical patients, especially Germany.
Interesting. I learned so much listening to this show.
Third prediction is Generation Z will be the fastest growing age group again. So this chart just goes kind of straight up. It's about a solid, 3% on average, 5.3% this fourth quarter, 2019. Every year, more members of Generation Z age into legal cannabis market, born in 1997 or later. So they predict that market share will increase to 8 to 9% of the total market share by end of 2020. Cannabis business owners should learn what makes this age group different as they contribute more to top-line sales. So as noted in the previous report, they're interested in inhalable products more than any other age group, and being younger, they're also more price sensitive than any other age group. So a lot of these Generation Z are interested in vape, although Instagram and Facebook made it even more difficult for that segment to advertise. You can no longer use influencers for vape pens on those platforms.
Be funny, I go out, spend a lot of time in the field asking these questions these days about the senior side of the market, right? And it's big. It's really, really big. But in the end, it's also, that's the dying segment. Meanwhile, here comes a whole new wave. I don't know, Chronic. It seems to me like using the term stabilize at all in the cannabis market space, I don't know if that applies.
Yeah, I think maybe the baby boomers are heading to the Walgreens and CVS, whereas Generation Z, they're able to capture a lot of this data from Headset because they're actually willing to go to the dispensaries and check out those products. So hopefully, again, with Nielsen, Headset's partnered with, they can kind of capture some more data and figure what all of that encompasses. Prediction number 4 is edible and beverages sales in Canada will reach at least 12% market share by the end of 2020. While there is some variability between the states, edibles and beverage categories captured between 9 and 15% during 2019 in all of the U.S. markets that Headset monitors. So edibles and beverages in Canada will be limited in package sizes to 10 milligrams, significantly more strict than the limit in any U.S. market. So this will limit the category's appeal to more seasoned consumers, or perhaps it will make the products more approachable for cannabis newbies. Either way, Headset predicts that the edibles and beverage market share across Canada to settle somewhere above 12% by the year end 2020. So I'm going to be headed to the Lift Expo yet again in Vancouver, the 9th, 10th, and 11th in January. Interested in checking that out. But 10 milligrams is terrible. We have 100 in Washington, and that's not enough. So do you have a fifth prediction? Is there anything on here that they have left out with, edibles and beverages, Generation Z, CBD market share plateau, and top brands continuing to gain market share?
Yeah, they have. They've left out the culling that is about to occur, right? The hard winter, as it were. It's interesting. On the ground in Washington and Oregon, even to a degree in California, the stress in the market due to excessive taxation, excessive expectation, excessive regulation create a condition set where, the number of businesses that I see that are on the brink of failure and are beyond the final straw that breaks the camel's back, right? The whole thing where you're already dead, you just haven't acknowledged it. Really scary. So it's interesting to me because I feel kind of like it's, I hate to get conspiracy theorist, but I feel like it's built to fail so that a whole different class of operator can come in. And I think 2020, you're going to see, at least in Washington and Oregon, a consolidation that I think should head that list.
Yeah, it seems like that's already started with 20% of sales going to just the top 2 brands, the 2 oldest brands. So at least in Washington, that consolidation has happened.
what that means in terms of if you're a fringe brand, you sold 5 less joints yesterday. And that's probably make or break on your biz, sadly.
Yeah, I saw somebody at the Kush Marketplace trying to sell a wholesale joint for like $1.75, and I was like, "There's no way." You know, when you've got companies out there with automated machines that are literally grinding it, filling it, weighing it, twisting the tops, and all of that automatically for pre-rolls, and then now there's several companies doing that. On top of that, you have cylindrical joints and blunts and all of that being automated. So that's going to disrupt the market too when you're able to sell it for 50 cents and make a profit.
Hey, shout out to Dose for their infused palm leaf blunt. Chronic, that might be my 2019 winner, just so you know. It was good. It was
I
really,
covered
really
that for
good.
a Christmas special or something similar. There was a blunt club in California where they deliver you blunts, and I was like, yes, that needs to happen in Washington. That's my little go-to.
Oh, this thing was superior. Anyway, so well, there you go.
That's it.
You got any extra predictions? Anything else we need to know? Any off the book remark?
I think it's going to be a lot more difficult for a company to raise money. I think there's going to be a lot more automation. Everyone's going to be looking at the valuation of a company, you know, with a fine-tooth comb. I think, you know, more consolidation. So that means that, you know, farms are going to have to look at a co-op model, and people are just going to have to figure out how to operate on profitability.
Right? Make money and to invest money in your biz.
That's it. So with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.